Over the past few months at Hammerson, we've been reviewing our business, focusing on a number of key areas with the aim of enhancing value for all stakeholders. Today, we've announced our plan to boost our future performance. It's been a turbulent period within UK retail as the market has shown continued signs of deterioration alongside the consumer market remaining subdued. Although we remain less affected than many by CVAs and administrations, it is a challenging time for retailers. In particular, when you overlay sharp pressures from cost increases with the living wage, business rates and currency pressure, this has been one of the toughest periods in a long time. Hammerson has created a portfolio of irreplaceable, high-quality destinations and a track record of financial outperformance. Although this strong financial performance has not always been mirrored by an elevated share price. This, combined with the rapidly evolving retail backdrop, has stimulated our rigorous review. As you would expect, we combined our own extensive insight with that of external advisors, which provided a thoroughness and extra level of validation. Our aim has been to challenge the existing approach and to ensure we had the right insight to make a truly informed assessment of our future. This review was also informed by new data on our consumer markets and the future trends in retail, providing insight into how best to position our portfolio and identify winning retail destinations. 16 million more people are expected to live in European cities by 2030, and greater urbanisation has the potential to transform the built environment surrounding our assets. Physical retail remains relevant. The UK is the most advanced multi-channel retail market with the highest online penetration rate. However, 2/3 of the volume of sales growth over the next 5 years is expected to come from store-driven sales. Occupier and consumer demand is polarised towards selected retail locations, with large flagship shopping centres attracting twice as much demand for new space as other shopping centres. In addition, consumer habits are driven by experience. The fastest growing shopping mission to shopping centres is the big day out, now accounting for 1/4 of trips with the highest average spend per visit. Patterns of online penetration vary across product categories, with health and beauty having the lowest penetration and a more store-based model. Online penetration of fashion sales is growing rapidly. However, this category also has one of the highest measured rates of store-influenced online sales, driving a new role for stores as a brand showroom. And finally, luxury outlets are positioned to outperform, with premium outlets making up around 12% of the market for luxury personal goods and expected to remain resilient to online spend, with an increase of around 7.5% per annum over the next 3 years. These key market trends have driven our review and inspired our vision of creating desirable European destinations where people, brands and partners thrive. To achieve this vision, elevate our performance and enhance returns, the main pillars of our strategy update include an optimised portfolio, operational excellence and focus on balance sheet efficiency. These have informed our plan to deliver enhanced value for all our stakeholders. We will exit the retail parks market, and this will be achieved through a managed disposal programme over the medium term. We remain confident of our 2018 disposal target with a further 500 million of disposals planned during 2019. We will rebalance our European exposure to around 60%. By 2020, we anticipate that 40% of the portfolio will be in the UK, a reduction of 10%. It is clear from the past 6 months that there continues to be considerable distress amongst high street fashion and department stores, and so you will see a proactive step change in our retailer lineup. We will aim to reduce department store space by 1/4 and high street fashion coverage by 1/5. We already have a modern, well-invested portfolio. However, over the next 3 years, the business will amplify the consumer experience and take our winning destinations to the next level. This will include creating a new dedicated events team at portfolio level, ensuring each destination takes full advantage of opportunities to boost footfall throughout the year. we have identified opportunities to achieve cost savings of £7 million per annum as a result of the reshaped portfolio. As part of our update today, we have announced a £300 million share buyback. The proposed buyback will be accretive to EPS and NAV per share. We remain committed to a strong balance sheet and will deliver over the medium term to reduce LTV to the mid-30% level. Hammerson has a successful track record of delivering iconic retail developments. However, due to elevated risks and while alternative uses of capital offer higher immediate financial returns, we will defer the start on site at our Brent Cross development. However, the scheme remains an important strategic project for us. The significant land holdings surrounding our shopping centres will be maximised through a new city quarters concept to deliver additional high-value uses such as residential, lifestyle and flexible workspace. We already have a valuable land bank as part of our portfolio, and we intend to accelerate the use of this over the medium term. To ensure we emerge stronger from this turbulent period of change whilst leveraging our enviable portfolio of winning destinations, our plan clearly sets out the actions we will take in the coming months and years to further enhance our performance and deliver compelling shareholder returns.